Well, I think Bitcoin will be here to stay probably in 10 to 15 years. I think that has a long run rate of growth ahead of it before, unless it runs into some sort of tail risk. So that's number one. I do think that stablecoins, basically that money is going to flow over blockchain rails more. So I'm bullish on the proliferation of stablecoins, for example. I think that's a better medium than we'd be using in the past. And then, we'll find out what the total addressable market is for distributed compute, basically, smart contracts, federated networks. We'll see if they can be used to bring down settlement times, things like that. That's still a very highly competitive industry. And a lot of that's been kind of based on, I think, artificial incentives. And so when the dust settles, we'll see, what is the actual kind of underlying utility for some of those technologies.
Alright guys, welcome back to another video. In today's video, the investor, engineer and writer with a focus on financial modeling and engineering economics, Lyn Alden, talks about Bitcoin crash and breaks down why just adding Bitcoin to an unstable protocol. She reveals the dark truth about the ongoing Bitcoin crash. She also outlines how to predict the next bull market while also giving her take on whether Bitcoin will withstand the oncoming recession. If you enjoyed the video, make sure to click the like button, subscribe to the channel and enable post notifications. So without wasting much time, let's dive into the video.
Well, I mean, I think they basically are a new platform for things that already exist. So in many ways, for example, Bitcoin is a commodity, right? It's classified for most tax purposes like a commodity. It doesn't pass the Howey's test, so it's not a security, it's not an equity. So the best analogy we have for it is a digital commodity. And then you have things like stable coins that are digital fiat. They're just digitally native fiat, basically a new medium for fiat currencies. And then you have a variety of other platforms that in many ways look like equities, right? For example, they have a network, they have a platform, and then they invite people to use their platform in various ways. And then people can judge what is the total addressable market of that platform, what does the long-term outlook of that platform look like. And so, I think that basically this is being integrated into, markets as they currently are, and we'll see what kind of technologies come out of this. If you look at an emerging market central bank, they issue liabilities, which is their emerging market currency, and then they hold other assets such as treasuries or gold that they can use to defend that. And if they start to run low on those reserves, you have to really get concerned about that currency. And so what essentially an algorithmic stablecoin is, it's kind of like an emerging market central bank that runs on autopilot. They're not really prone to stability. They kind of always have these inherent weaknesses. And Terra tried to shore up their weaknesses by buying Bitcoin in a similar way that emerging market would buy gold. But my concern was that in a risk-off environment, which is what we're in now, most of the crypto space tends to suffer. And when that happens to Luna's like total equity value compared to their UST value, that can eventually erode the value of their equity and result in a death spiral, which is what we saw. So I think it's not necessarily using Bitcoin as collateral that's the problem. I mean, in some ways it's ideal collateral. It's still because it's a young asset, it's still volatile though. So it's less, it's more volatile than treasuries or gold or something like that. So you have to put up with volatile collateral, which is not ideal. But I think the bigger issue is that just by adding Bitcoin to something doesn't fix that thing. If that thing is inherently unstable, it doesn't matter if you have Bitcoin reserves because your thing is unstable. Right. And so, maybe if they had more, they could have prolonged it. They could have had this whole death spiral be a lot slower than it was. It would have been less spectacular. But basically, you can't fix a broken system by adding Bitcoin to it. And so, if a company wants to add Bitcoin to their reserves as a percentage of their long-term holdings, I think that can make sense. But if you're inherently an unstable protocol, Bitcoin doesn't fix that. So the two areas that I'm bullish on in the crypto space are Bitcoin and stablecoins. And really with Bitcoin, what we're seeing is the test of this new asset. We're seeing how hard it is. We're seeing if it can withstand community disagreements, soft forks, all the different challenges there. So far, it's been able to withstand that. And so I think that's a long-term thing that's going to withstand the test of time, most likely. And then the other one would be that there is a strong global demand for money, for low volatility money, which is stable coins, basically. And the way fiat currency works is that they try to control volatility by devaluing gradually over time, right? So a dollar loses value year after year after year, but in most circumstances, it doesn't explosively lose value over, say, a 2-month period. And there's people around the world where, they're living in double-digit inflation. They have restrictive monetary regimes. And, for example, in Argentina or Lebanon, if you had dollars in the bank, let's say you made the decision, you don't want to hold the local currency, you want to hold dollars, they just took the dollars. They can just take them and convert them to local currency, and then you get devalued anyway. And so ironically for them, for people, they'd rather trust, a foreign custodian that could hold dollars for them on the blockchain and take any sort of risks that might come with, the quality of their collateral, things like that, versus storing dollars in their own banking system. And so I think the combination of Bitcoin long-term and stablecoins kind of, intermediate term, I think both those things are real use cases above and beyond speculation that I think are going to persist for quite a while in this industry. And so historically, Bitcoin has generally done very good in rising PMI environments. So economic acceleration, liquidity is flowing, most risk assets do well, and something with a lot of volatility like Bitcoin generally does even better. Then, of course, many of the altcoins, they skyrocket. And then when you have the declining PMI environment, altcoins get killed, Bitcoin suffers, stocks in general, especially riskier ones, overvalued ones tend to suffer, whereas things like cash, defensive value stocks, gold, those sort of assets generally hold up better. And right now, we're kind of firmly in the middle of a declining PMI environment. Now, that doesn't mean that Bitcoin can't, like in the prior declining PMI environment, it managed to bottom before PMI bottomed. It doesn't just follow this perfectly. So I think we've already seen quite a lot of the washout. Whether or not we get a lower low, I still think is anyone's guess. What makes this one so challenging is that because inflation's high, the Fed is trying their best to tighten monetary policy into a weakening environment. They're purposely trying to reduce demand and basically cause a near recession. And I think that's not going to go well for them. I think they're going to have to reverse at some point. But until you get that reversal, I think we are in rather risky territories, especially if I was trading any sort of leverage, I'd be super careful. And then even unlevered, people just have to make sure that they have the right amount of exposure for whatever volatility they can afford. So I would never recommend that someone put 100% of their portfolio in Bitcoin and things like that. I just think, whatever allocation you want to it based on your education on the asset, your conviction, what you think it's going to be worth in 5-10 years, you can have that allocation. And I think you have to be willing to withstand a lot of price turbulence over the next 12 months, or at least until we see some sort of reversal from these current conditions, which is economic deceleration combined with monetary tightening, which is, pretty much anything other than cash and defensive value things are going to have a rough time there. The other factor would be that Bitcoin got big enough that it's now like an institutional asset. And so you have hedge funds trading it. You have a lot of professional money trading it. And so the Venn diagram of who owns Bitcoin versus who owns the NASDAQ came together quite a bit. There's environments where I think that could decouple. One would be if you see a reversal of Fed tightening, so you have more liquidity in the market, but say you still have that combined with inflationary pressures on company margins. That could be an environment where stocks, they might not do that well, whereas, commodities, including gold and Bitcoin, could do pretty well because they're benefiting from liquidity without having to worry about margin pressure. They don't have employees, they don't have margins. They're just, these scarce assets. So that could certainly result in a decoupling. Another one would be that, even though the two types of holders have kind of come together, they're still not completely the same. It's not the same people all own Bitcoin and NASDAQ. And so, for example, a lot of people are dollar cost averaging in a Bitcoin and they're not buying the NASDAQ. And eventually you can dry up all of the liquidity, basically exhaust all the sellers, and then get a reversal. I think you're most likely to see that when you have more liquidity in the market and when you have a rising PMI environment.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.